Hello, world. Welcome to the 39.6 Facebook Live Finance Show. I'm your host, Victor Mangone. Today is August 15th, 2020. Today's episode number 40. What is the capital stack? Thank you to everybody who has joined our Facebook group over the past week. We are up to 355 members, well on our way to hit 500. Everybody, please invite 1/3 of a friend, and we will be almost there, almost exactly there. So if you all do that, we will hit that number really quickly. Much appreciated. Today's Saturday. We're going to do a quick one. Okay, I'm going to try to be done in 5 minutes. Okay, I'm also going to post a link in the comments and see if anybody here can see it. BeLive has all these privacy things now, so you actually have to click a link to allow us to see who is commenting and posting. Okay, so there is a link on the screen. If you hit that, if somebody, there's one person in here, welcome, can try this, I would appreciate it, because I used to be able to share people's comments on the screen very easily. But not so much anymore. You have to give permission. So if you want to be able to be shown, please try that link. So today's episode number 40, what is the capital stack? Okay, so when you invest by yourself and you own a property, for example, a rental property, you get out a mortgage on that property. All of the earnings that come into your bank account for rent and any other income you may have with that rental, you have to pay off all of your expenses. And after your monthly expenses are paid for, then the first thing you have to pay beyond your regular expenses is the mortgage. That's the debt service. Okay? Everything that's left over after debt is paid off is profit to the business. Okay? Now, if you own that rental property by yourself, all of that equity, you own 100% of that business. Okay, so it flows from the bottom to the top. So I have a picture here on the left side of a very simple structure. In the first column, you have debt on the bottom and equity on top. Debt is the lowest risk position to be in because money has to go there first. Then leftover money gets paid to the equity holders, you, okay, the person who owns the property. Now, if you are investing in private equities with groups of people in syndications, it's a different story. Okay, usually you don't just have a mortgage and just one person, right? There's a group of people. And this can be divided in various different ways. Okay, I'm showing on the right side a little bit more of a complex structure that has 4 layers to this capital stack. Okay, so this is like a 4-layer cake instead of a 2-layer cake on the left. Okay, so again, lowest risk is on the bottom and highest risk is on the top. Okay, so let's pretend you're investing in a syndication and they are trying to raise, or let's say the property is $10 million. Okay, and then they're able to get a mortgage, the first mortgage from Fannie Mae or Freddie Mac, we call agency debt, and that is, let's say, $7 million, okay? And, but you need $10 million to acquire the asset. So Fannie Mae, let's say, writes you a check for $7 million. Now, that might be at 3.5%. It could be super cheap, okay? But they're getting paid first. That's your mortgage. Now, you need another $3 million to acquire the asset, and you're going to need some more capital just for working capital because you need cash reserves. And then you may also want to have some extra capital to invest. So you are then going to raise extra money, and you may take out another layer of debt similar to a second mortgage. You may say, we need another $1 million in mezzanine debt. Okay, so this is a second lien position. That mortgage only gets paid if the first mortgage is paid off first, okay? Or if there's a foreclosure of the property and it gets sold at auction, if there's cash, that's that's generated at the sale, it has to pay off the first mortgage first. And only if there's remaining dollars can it then pay off the second level, that mezzanine debt. And then only if there's money left over after that can it go to equity holders. Okay, so it's a second lien position. It's a riskier position. It's going to require higher interest rates in order for people to invest at a second lien position as mezzanine debt. Okay, but it is a debt, and because it is a debt, if the property is not making enough money and they're at risk and they don't pay that mortgage, that second mortgage, then you can foreclose the property the same way that the primary lien holder can do. Okay, so that is the privilege of being in a debt position. If you don't get paid the money that you're due, you can foreclose to acquire the asset. Now, the equity side, you have another layer, which we call preferred equity. Does not have to be there. Some deals have preferred equity, some do not. I really like them because you sit in a position before the common equity, which is where the general partners in a syndication usually sit. Okay, so limited partners usually get preferred equity in these types of structured deals, and that means you're going to get a certain amount of money first before profits are distributed between the preferred equity and common equity holders as additional profits. So let's take, for example, senior debt is getting paid in principal and interest, or let's just say principal interest only at 3.5%. Then mezzanine debt is getting paid interest only at 7%. Then the preferred equity holders might have a preferred rate of return of 8%. And then if they're getting paid an 8% return on their money, additional extra money will then get divided between the preferred equity holders and the common equity holders, depending on how the documents are designed in terms of what ratio that gets divided. Okay, but the common equity holders get paid last, only after all the layers below them are paid. So that is the capital stack. If anybody uses that term, that's what it is. And it can be more complicated. There could be like 7 layers in it. Okay, but they're always broken up into debt layers and equity layers. And that's how it works. So that's it for episode number 40. I'm going to get down to 5 minutes one day. So until tomorrow, episode 41, I think I might actually break down a deal. Somebody asked me to do that, and maybe tomorrow night will be the day to do that. So until then, have a great Saturday and invite your friends. Yes, I need to figure out how to get notifications set up for these lives. I'll try to look that up and post it tomorrow on this thread so that when they come on, you can see them. Thank you, Facebook user. All right.